welcome to the World Battery Metals and Mining News for the last 3 days from 9th to 11th of August 2024. Jadar saga continues. Rio Tinto's Serbia lithium mine project faces fresh protests. Thousands of protesters thronged Belgrade to oppose Rio Tinto's $2.4 billion lithium mine project, with demonstrators chanting, "You will not dig," and branding the venture as treason. This controversy underscores the difficulties faced by European mining projects, despite their critical role in the energy transition. Although Serbia's top court lifted a previous ban on the project, activists remain unconvinced by government promises of strict environmental standards. The administration, on its part, claims the mine could significantly boost the economy, potentially adding €12 billion annually if paired with local battery and EV manufacturing. Notably, both Serbian and EU officials, as well as industry giants like Mercedes-Benz and Stellantis, have shown interest in developing EV battery outputs, emphasizing the mine's strategic importance. But let's be clear, while Serbia's top leaders paint a rosy economic picture, one wonders if they are more focused on mineral riches or their own political gain. U.S. Strategic Metals in line for $600 million government funding. Jumping on the nationalistic bandwagon, U.S. Strategic Metals is eyeing a potential $400 million loan from the U.S. government's Export-Import Ex-Im Bank. This Missouri-based miner, sitting on one of North America's largest cobalt reserves, is planning to ramp up its mining endeavors near the Madison mine and bolster its metallurgical plant to churn out cobalt, nickel, lithium, and copper. The Ex-Im Bank, which is all about sticking it to China through its China and Transformational Export Program, CTEP, sent a non-binding letter of interest for a 15-year funding package, contingent on thorough due diligence and underwriting. The company touts this loan, allied with its existing funds, as the magic potion to cover almost all construction and development costs. In their quest to wean America off fossil fuels, U.S. Strategic Metals isn't just mining. They're also recycling metals from lithium-ion batteries, which is actually sensible. They have an 18-year supply on an 800-acre site and an additional 2,000 acres of mining rights. Notably, they've struck a deal with the Missouri University of Science and Technology to bridge the gap in the U.S. battery supply chain through precursor cathode active material (PCAM) research, even roping in academia to milk out some embryonic tech know-how. Australia's fledgling batteries downstream sector at a crossroads. Australia's ambition to become a downstream lithium titan just took another hit, with Albemarle halting parts of its Kemerton hydroxide plant. Over-ambitious and over-budget, they're shelving Train 3 and idling Train 2 while nursing Train 1. Tianqi Lithium and IGO Lid aren't faring much better either, grappling with their Kwinana plant like it's a stubborn kangaroo. Canaccord Genuity analyst Tim Hoff rightly points out that Australia's cost structures are just not up to snuff. While some, like WA1 Resources, are soldiering on with downstream plans, it's clear the industry's stress levels are sky high. The enlightened souls up top, Liontown's Ottaviano and IGO's Vela, are advocating for strategic partnerships and sustainable practices, perhaps not too keen on dying by the subsidy sword. Meanwhile, Lynas Rare Earths CEO Amanda Lacaze is waving the flag for more robust infrastructure and consistent, affordable power to save the day. At the end of the tunnel, we see folks like Dale Henderson from Pilbara Minerals banking on midstream products to dodge the full complexity of lithium processing. Australia's downstream lithium dream needs more than just wishful thinking. It needs pragmatic innovation, solid infrastructure, and sensible policies. Chinese mining firm files judicial review against Ottawa Jianteng Mining, a subsidiary of Zijin Mining Group, is taking the Canadian government to court over a decision to review its $245 million purchase of a Pan American Silver Corp gold mine in Peru on national security grounds. This move by Ottawa reflects a stricter stance on Chinese state-owned investments in Canada's critical minerals sector since 2022, even if the assets are overseas. The government's paranoia seems to be reaching new heights, as they've now forced divestments in graphite, lithium, and copper for the same reasons. Interestingly, Canada identifies 31 minerals as critical for technologies like EV batteries, but gold isn't on that list. Will Canada let Jinpeng's purchase slide? Only if their national security whims allow it. Perenti signs multi-million-dollar deal with Barrick Gold. Perenti's Barminco has secured a 3-year, $200 million contract extension with Barrick Gold to continue operations at the Hemlo Gold Mine in Ontario, Canada, with the potential to extend the agreement until 2029. This deal reduces Barminco's capital burden since Barrick owns and will procure the underground equipment. The contract encompasses mine development, production, and support services, emphasizing Barminco's role since 2019 when Barrick switched from owner-operated to contract mining. CEO Mark Norwell touts this partnership as evidence of their ability to forge long-term, value-driven relationships. Hemlo has been active since 1989, underlining the importance of enduring collaborations in the mining sector. Perenti, with a market cap of $905.1 million, continues its focus on contract mining, support services, and integrating future technologies into its operations. WA1 Resources emerging with $100 million war chest. WA1 Resources, A1, has won the 2024 Diggers and Dealers Emerging Company Award and secured a hefty $100 million for advancing its Luni niobium deposit within the West Arunta project in Western Australia. Boasting a 200 million ton resource at 1% niobium pentoxide, this project is hailed as the most significant niobium find in over 7 decades. After raising $60 million in July 2024 and another $40 million in January via equity, WA1's bankroller is focused on refining high-grade zones through extensive drilling, with over 250 holes already logged. The shallow depth of the resource, beginning just 30 to 70 meters below surface, makes this a particularly promising venture for efficient extraction. As usual, let's hope they keep their mining clean and don't turn it into yet another corporate mess. Arizona Lithium produces Saskatchewan's first kilogram of battery-grade LCE. Arizona Lithium has reached a notable achievement with the production of its first battery-grade lithium carbonate at the Prairie Project in Saskatchewan. Indeed, a surprising twist for a region better known for oil rather than lithium. Verified by Saltworks Technology, the feat represents the first lithium mined in the province, lauded with enthusiastic fanfare and 2 new critical minerals incentive programs worth a hefty $500 million. Utilizing direct lithium extraction, DLE technology, the pilot project impressively transformed underground brine into a high-purity product, making many nod their heads in approval. With a lifespan of 20 years and projected 6,000 tons of lithium carbonate equivalent, LCE, production per year, the math suggests a net present value of $312 million, sporting a decent internal rate of return. Leveraging conventional oil and gas drilling methods. Yes, you heard that right, keeping the tech game strong. They kicked off production drilling in May 2024, with independent pads set to hit the production stride by 2025. Meanwhile, they're also focusing on their Big Sandy project in Arizona, proving that diversified ambition can indeed power through. Gold price on pace for worst week since early June. Gold prices held steady on Friday after a hefty uptick the previous day, as fresh U.S. economic data alleviated recession fears, making the metal less appealing as a safe haven. Spot gold hardly budged at $2,428.66 per ounce, following its largest surge in 3 weeks at 1.9% on Thursday, while U.S. gold futures inched up by a mere 0.1% to $2,468.40 per ounce. Despite the weekly decline of about 0.8%, the outlook for gold remains bright due to decreased unemployment claims and the prospect of Federal Reserve rate cuts. Other key drivers include heightened volatility, geopolitical tensions, and increased purchases from central banks and Chinese consumers. Analysts suggest that while short-term dips may occur, the medium-term outlook for gold is positive, acting as a hedge against broader economic uncertainties. So here we are. Gold flirting with record highs again, not because of some grand market insight, but largely thanks to a mix of investor panic and a sprinkling of hopeful Fed whispers. ASX sees green shoots to end turbulent week. The Australian Securities Exchange, ASX, managed to close a roller coaster week on a high note, with the S&P ASX 200 climbing 95.70 points, or 1.3%, to 7,777.70 on Friday. Importantly, the index managed to surpass its 125-day moving average, with all sectors finishing in the green. The information technology sector led the charge with a 3.2% surge, while materials and energy weren't far behind, clocking in at 1.9% and 1.8% respectively. Top performers included Life360, up a whopping 17.6%, News Corp at 7.6%, and REA Group, which climbed 6.7%. Notably, News Corp is toying with the idea of selling Foxtel amidst third-party interest. On the flip side, Neuren Pharmaceuticals, Light & Wonder, and QB Insurance didn't share the bullish sentiment, slipping 5.4%, 3.1%, and 1.7%, respectively. Despite the positive end, the index dropped 2.1% for the week, underscoring concerns of a potential U.S. recession and resting 4.48% below its 52-week high. IAMGOLD shares surge as it exceeds H1 output cost targets. IAMGOLD shares surged to a monthly high following impressive H1 2024 results that exceeded production and cost targets. Gold output hit 317,000 aughts, with reduced cash costs of $1,062, and all-in sustaining costs AISC of $1,553 compared to the prior year's numbers. The second quarter alone saw production of 166,000 aughts, far surpassing both last year's output and analysts' estimates. This performance propelled adjusted net earnings to a whopping $137.8 million, a significant leap from $22 million in H1 2023. Much of this success is attributed to the strong performances at Essakane and Westwood mines and the promising start of the Côté Gold mine in Ontario, which contributed 20,000 aughts in its first full quarter. IAMGOLD consequently raised its production guidance and lowered cost estimates, partly driving the stock's 15.8% increase to $5.88. With market excitement ramping up, the miner's market cap now stands at approximately $3.3 billion, 2.4. Not bad for a company once thought to be on shaky ground.